Kevin Wadsworth from NorthstarBadCharts.com is back once again to give us the probabilities on the short-term outlook for precious metals. This and more on this week's episode of Metal Money. I'm your host, Patrick Vieira. Kevin Wadsworth, welcome back to Metal Money. How are you doing?
I'm doing great, Patrick. How are you?
I'm doing great. Glad to have you back again. Kevin, I just want to start by cleaning house a bit. I want to go back to a chart you posted on Twitter back on September 19th. And it looks like you're seeing gold at roughly 1710 in October. And if I'm reading this chart correctly, can you tell us why you're looking at that number in October and the significance of it, 1710?
Yeah, sure, Patrick. Well, we've got the gold chart here. You can see how it's carved out, a very typical and very common actually chart pattern where you get this bullish pennant and very large arc forming, and we find ourselves in the top right hand corner of the arc at the moment, and it's been building out what some chart technicians might call a handle to the arc. Now sometimes these handles occur within the arc, sometimes they extend and come down outside of the arc, and this arc that I'm talking about, it's this curved support line at the bottom that is geometrically perfect, and it has these touch points where the price comes down and touches and confirms the arc as we move around. So this is just this line that I'm moving here. It's just a support and resistance line that happens to be in the shape of a geometric arc, and they're very common when you start looking across the sectors for these, and you see them all over the place, and they play out pretty reliably, I have to say. And at the moment, we find ourselves with gold at quite an important point because it's just testing the support line of this arc that started way back in 2011, and the 1685 area is where we had the previous low. And as time progresses, the support on this little mini arc that I've drawn in here, I'll just make the line a little bit thicker so you can see it. There you go. As time goes by, the support level on that little mini arc just lifts up a little bit, so that we're probably closer to around about that 1700 area at the moment if price was to spike down. But we are getting support off this larger arc, geometric arc chart pattern. So all we can do at the moment is just watch and see if this horizontal level and if this also this arc support line holds. If not, then it does look as though we're coming back down close to the previous low, although probably just a little bit higher. Overall, though, what I'm looking for is a breakout above this resistance line here, and for this smaller arc to start guiding us back upwards again. But we have to follow the chart evidence and follow these chart patterns as they build out. But that's how I'm seeing it at the moment.
And in that same tweet, you noted that if gold breaks below 1675 or around that area, all bets are off. And where is gold headed should it break below that 1675 price point? And what would be the cause or causes for that downward pressure on gold?
I think to get down to that level and lower, and bearing in mind that we've already tested that level 2 or 3 times now, it's a significant support level. So if we were to break below that 1675, 1680 area on a weekly closing basis, that would really get me worried, and certainly on a monthly closing basis, then and that would probably be brought about by some kind of market meltdown. I don't really see how gold can sustainably go lower than that without some kind of event taking place that probably takes many sectors down with it. Some kind of stock market drop of maybe 10, 15, 20%, something akin perhaps to what happened back here in March of 2020 or back in 2008, for example.
Yeah, thanks for the honest assessment. I hope it really doesn't go down that far. But looking at the weekly silver chart, it seems to have fairly strong support at the 22 level and resistance at about that $28 level. Kevin, why does silver seem to be trading so contently in this band between 22 and 28?
Yeah, it's really, when you zoom out and look at it from a little bit of a distance, you could view it as a sort of a flag type formation, perhaps something akin to what happened back here in 2009-10 before we saw a very large upside move. So one thing is fairly certain, I think, here, and something I've been saying for a while, is that a decisive move in one direction or the other is certainly coming. I mean, you could put the support line back here, and we've had a breakdown if you're viewing the pennant in that sort of fashion, or you could look at it like this and say that we're still consolidating this range. I think it would take a break below those previous lows, somewhere around about the $21.50 level, to really sink this thing and send us all the way back down, quite possibly to much lower levels. There is you know me, and you know I like to follow these arc formations because they're very reliable, and there is an arc in here that should support the price, but it's a long way down below here. And if we were to start breaking down now, you can see, looking visually at this arc, that we would probably come back down to somewhere between, well, if we came down very sharply, very quickly, we might get down to the $15 area, but more realistically, perhaps somewhere down here in the $17 area in the next 18 months or so. But that isn't really my primary expectation. I continue to expect an upside move and an upside breakout. We've already seen some pretty big moves actually in some sectors. If you look at lumber, that's again starting to pick up from its previous lows. And you look at oil, I notice crude oil today is making some good moves. And if you look at it on the non-log chart, that has actually broken out. And quite a lot of the commodity indices are at or around breakout levels as well. Copper is just holding steady at the moment. So we're very finely balanced in a lot of the markets. And we're going to get a direction, I think, pretty soon. Either a strong bounce in this area and a move to the upside, or, of course, that dreaded breakdown. Don't think we have much longer to wait.
Okay, so you did mention 15 and 17, and as mentioned in that question, silver has been trading in that band for over a year. But Kevin, is there anything you're seeing in these silver charts that is grabbing your attention? Anything that you're seeing for short-term silver?
In the short term, well, it's all about this support area, isn't it? And you can see that we're bouncing at or around this level around about $22, $21.50, $22. And if I just zoom in on the chart a little bit here, you can see that we've arrived at an interesting point here, in fact, where this pivot line that I've just put in here, it was acting as a resistance line. We tried to break above it a couple of times, 2, 3, 4 times, and then we broke through it, and it's acted as a support line here. So that verifies the line as having significance. Now, if you follow this line down, where does it end up? It ends up exactly where we're just bouncing at the moment. So this point just here, where we've got a meeting of the horizontal support and that downtrending support line, was resistance, now support. That's a point of significance right there. So it makes sense to me that we get a bounce, whether it turns out to be the move that we're all waiting for that takes us up here, or whether it's simply just a letdown that takes us, back to $27 or so, and then we sink. So the next area that we really need to watch closely, should we begin to move up, is this area around about the $27.50 area, which comes from this resistance line above us at the moment. Also ties in with this horizontal support and resistance zone, the sort of top area of that as well. And I dare say if we put some moving averages on this chart, there'd be some moving averages of significance in that area as well. So that is how I would be playing it at the moment, expecting a bounce, watching what happens when we get to here. And then, I really should say as well, for everybody watching this, that when you get these large arcs that take years and years to form, we're pretty certain now, or I'm pretty certain now, that this arc is genuine, and we've had a confirmation of the arc near the base here. So we will test the arc at some point in the future, whether it's down here or whether it's somewhere further up here. This arc edge will be tested. So for investors who are thinking about silver, physical silver, and the miners as well, of course, when the price does come back and test this arc, whether it's now or whether it's in a year's time or whether it's in 2 years' time, the place to take positions is on the arc test. When you look back in history, you look at these charts and you think, damn, I wish I'd been able to get in at that point when it was testing the arc. Well, we know where the arc is now. It's fixed solidly on the left hand side here. Seriously, the fundamentals are baked into this chart already. This chart is fundamentals. Everything that people know about silver at the moment, at this point here, is already reflected in the price. Expectations, forward expectations for the Fed, for interest rates, for real rates, for debt burdens, for whatever it happens to be, for demand, industrial demand. It's already baked into the price. So fundamentals and technical analysis, it's one and the same thing.
Kevin, last time we spoke, you had mentioned how nothing had broken down in precious metals charts, and silver had held up fairly well with expectations of the U.S. dollar. A short term, where do you see the U.S. dollar moving?
Yeah, it's an interesting one as well. I think a lot of people are very interested to know what's happening with the US dollar, and there are lots of different ways of visualizing this. And my sort of techniques, my methods are to look at a chart, whether that's the gold chart I'm moving up and down there, by the way, that orange line, and the graph underneath it is the dollar chart. My methods involve spotting repeating patterns in price charts and finding what it is about a price chart that governs the movement of that particular stock or that particular index. Now you can see that the US dollar displays a very clear cyclical behavior. There's a cycle here where it bottoms in the early 1990s, and then it rises and it forms a top in the period around 2000, 2001. Again, a sort of an arc formation, 1, 2, 3 touches and down it again. We form a base pattern, another part of the cycle, the dollar cycle. And you can see the dollar cycle shown on the bottom here. They tend to be around about 15, 16 years in length. So we've got a dollar cycle low approaching, and we've seen the US dollar attempting to move up. The dollar index has been 1, 2, 3, sort of 4 touches on this arc here, or at least 3 touches. This one was a close touch there, but this is confirming that we've got a downtrend building. Again, a little bit like Bitcoin did earlier on this year. There was an arc formation very much like this that gave us the pre-warning. And also in Bitcoin, by the way, there was this bear flag that formed, this bearish pennant. And these patterns, they form over and over again across multiple sectors. And you can see what's happening here if I just zoom in a little bit on the dollar chart. We've got this bearish rising wedge and we've broken down. And then we're attempting to break above the arc, this small arc pattern. Now, if I put this onto the daily chart for you, you can see what's going on in much finer detail. And I'll just zoom in on the scale here. So you can see that the arc curving down and wanting to pull the price down. US dollar is just wanting to break out above that. We haven't had a monthly close above the arc. All these candles here are daily candles, of course. So it's really only in the last few days that we've seen prices closing outside or above this arc. Now, it's really going to hinge on what we see for the monthly close later on this week. So that's what I'm watching for. If we close above the arc here and above, shall we say, 93.1, 93.1 on the index, somewhere like that, then that'll be a little bit of a warning sign for those that are wanting to see the dollar go down, and may start to open up some higher upside possibilities for the dollar. But at the moment, what it looks like to me, again, it's a bearish rising wedge with a back test from below. So at any point, this could just give up and begin to fall away quite rapidly. Now, we have to respect the chart action. At the moment, price is just above the arc here. You can see it broke above the arc over here on the left-hand side, but it closed the month back down below the arc. Put it on the monthly chart. You'll see that all of these closes are inside the arc. So there we go. That's the monthly chart for you, and I'll just bring the chart across. And of course, TradingView messes around with the arcs when you change the timing on them, and it's jumping around and making it hard for me to put the arc on. But if I zoom in and you look at the bigger arc, again, the candles on the bigger arc, you get these wicks that close above the edge of the arc, but they're not in the long term important. If price closes back down inside the arc on the monthly closing basis, then all's good, and the bearish scenario will continue to prevail. So it all hinges on where we close this month. Will that monthly candle close inside or outside of the chart pattern? And that will give us a much clearer picture and a much better view of where we're likely to be going over the next few weeks and months.
All right, we'll have to check back in with you to see how that monthly close went down. Kevin Wadsworth, North Star, badcharts.com. We appreciate the time you've given, and we hope to do this again soon.
Thank you, Patrick. Thank you.
There you go. Kevin Wadsworth from NorthstarBadCharts.com showing us how the ARCs will heal the aches for precious metals buyers. As always, please leave your thoughts in the comment section below, and remember to keep it liquid, keep it real, and I'll see you on the next episode of Metal Money.